Hello friends, today I would like to talk about preparing financial statements. At the same time, we will make a link between accounting records and financial statements, which are balance sheet and profit and loss statements or P&L statements. This study helps us understand logic of these statements. I promise you it's gonna be very easy. These are our transactions. This is balance sheet. This is profit and loss statements. We are gonna prepare both two statements according to these transactions given. A balance sheet consists of two sides, assets and assets or sources or liabilities. Assets amount must same with source amount. So if a company has $1 million assets, it means the amount of sources must be $1 million. Okay, let's start the sample establishing a new company with $250,000. It means the company has $250,000 cash as an asset and $250,000 capital put by the owner as a source. This is capital as a source. $250,000 and this is cash, same amount. And look at the total of assets and sources, they are same. With accounting approach, debit is cash and credit is capital. After that, the company buys trade goods to sell with supplier's credit. The amount is $100,000. As you know, $100,000 goes to inventory on the balance sheet, but we have not paid yet. What should we do? This is inventory. This is $100,000, but you know, we haven't paid yet. This is kind of source provided by suppliers. Look at the total. They are same. Again, with accounting approach, debit is inventory, credit is suppliers. Number 3. The company buys a truck to deliver their goods by cash. The cost is $50,000. You know, truck is an asset, long-term asset or non-current asset, or we can call it fixed assets. This is truck, $50,000, but it's not a credit provided by suppliers. We paid it from cash. You know, now assets is more than sources. I need to reduce this amount from cash because we paid. Now we have $200,000 cash, $100,000 inventory, and $50,000 truck. Our total assets are $350,000, and our sources is capital $250,000 and supplier credit is $100,000. The total source is same as total assets. Okay, number 4. The company sells the good with credit, not cash. Sales amount is $80,000 and their cost is $40,000 or cost of goods sold. We need to reduce it from inventory because we delivered it. The cost of inventory we delivered was $40,000. And our sales amount is $80,000, but we didn't collect it yet. I mean, this is kind of receivable. What kind of receivable? It's a trade receivable. It means our customer will pay it next time. Not right now. It was $80,000. And if you look at the total assets and total sources or liabilities, they are not equals. What about $40,000? That's a difference. What should we do? What is this? How can I describe it? Yes, I'm hearing you. It's a profit. Now they are same. And we need a profit and loss statements because we need to describe, we need to define the profit. We need the detail of profit. Okay, we know it's $40,000, but how can we have it? This is sales amount. Yes, and also cost of goods sold. This is 40, and the difference is gross profit. Sales minus cost of goods sold. Look at that. Profit on the balance sheet is same as profit on the profit and loss statement. They must be same. This is a very important point. Okay. Now number 5. The company pays $90,000 to the supplier. We need to reduce it from cash, and also our debt to suppliers will be $10,000 only. You know, we paid from cash $90,000 and our new debt is $10,000 only. Let's check it if it's true or not. Look at the total assets and sources, they are same. Our profit amount on the balance sheet is same as gross profit on the profit and loss statements. And number 6, we also collect $60,000 from the customer. So $60,000 goes to cash. Sorry guys. And you know, our trade receivable is not now $80,000. It's $20,000 right now. They are still same. Okay, the company number 7. The company pays rent $5,000 and salary $20,000. These are operational expenses. The total is $25,000 payment from cash. On the other hand, we should reduce it from profit. You know, the total payment from cash is $25,000. These are expenses, rent and salary expenses, operational expenses. Our profit is not right now $40,000. Our profit will be $15,000. Now still they are same, and we should put operational expense here, profit and loss statements. And profit is now $15,000 with same as the profit on the balance sheet. Okay, friends, I hope I help you to understand logic of financial statements. Thank you.